one man saying that is fine. If that's your opinion and you're not in it, that's fine. But there is an entire market of millions and millions of people that agree that it is a store of value. So, you can think one thing, but there's also a market, and markets tend to become efficient over time.
We do know that you will always get paid in HEX on a daily basis. And that is truly the miracle that we call HEX, because it is trustless interest, trustless yield. Nothing will stop that contract from running.
Every girl's crazy about a ChrispyMan. Whoop. Welcome into the Creed of Crypto live stream. How you doing? I am Boi Crypto. I have here with me, as always, my friend and co-host Crypto Ewok. And of course, down below, we have got the one, the only, the man, the myth, the legend. I kind of was going to combine both of them. ChrispyMan from HEXfire.io. We're going to talk a whole bunch of HEX data tonight. We got a lot of stuff to get into. As we get into the final quarter of 2024 here, we got a lot of stuff going on. Huge updates to PulseX over the last couple of days, which we're going to tackle. There's been lots of thoughts on that on Twitter, a lot of it on YouTube's as well. We're going to get the take of all these gentlemen here tonight. We're going to check in. We just had Pulse hit a new all-time low in the last couple of days. It is rallying a bit right now, the whole ecosystem. We got some green candles going on right now, so we're going to get into that as well. And a whole lot more. We want to hear from you guys too. So hit us up in the chat, questions, comments. There is a lot going on. Whether you want to commiserate about prices, whatever it is, we would love to hear from you guys. So hit us up in the chat. Checks my pulse. Yo, Mackie, HEXfire. Obviously, he's here, and a whole lot more. DJ Moonboy. Appreciate you guys. Viper Styles. Hit us up in the chat. We want to hear from you guys. And hit the like on the way in. So, gentlemen, how are we this evening? We'll start off with you, ChrispyMan, as the guest of honor. How are you feeling about the markets right now?
I'm staying crispy. Hey, in these times I gotta like remind myself not to get super emotional, right? Because I get super emotional about it. May not wear it out on the outside, but I don't like red candles any more than anybody else does. But I think overall, I know we're beginning to hear again, the cycle's changed, right? And I don't know that it has. Maybe it has. Don't know. But I'm beginning to hear those things out there, those rumors. No, it's going to be different this time. We already hit a top. We're not going up. I mean, so it gets to be very emotional. But looking at the 4-year cycle charts, they look sort of like they're rhyming from the past, right? So we won't know until we know. Then we'll have to just live through it. And I always just console myself with the mantra, right? One of the things we learned, particularly with Richard Hart, is that volatility is in the game. Dips are in the game. Yes, I know it feels like it keeps on dipping, but it hasn't always been true. We look back, back in March, everybody was super happy, right? Things were woo. Look all the way back in January, things were super happy, woo, right?
Yeah.
But so it's not any surprise to wake up and see crypto drop 30%, 50%, right? So.
Especially, and I was just thinking about that today, and I want to get your thoughts on it too, Ewok, but just to kind of, I guess, launch right into this topic, because the time thing is something that I think people should be paying attention to. Like, everybody's upset about ETH right now, obviously. It's just absolutely bleeding against BTC. It had a horrible month of August, as did basically everything, but ETH in particular really took a beating. It's down to, about 2,500, 2,400 right now against BTC. And I was just thinking, you mentioned ChrispyMan, like the cycles still kind of look like they're rhyming, even though we might have taken a weird path so far. Like, we've never really seen BTC hit that new all-time high prior to the halving, which we did see this year. So might be why we're seeing some of this weird compensation for that as this year goes on. And who knows what that'll mean for this fall as we get into 2025. But just on that, Ewok, real quick, just your thoughts on the cycle timing and just kind of the uniqueness we've seen of this one. It's unique in a way, but also, as Crispy said, like, timing wise, I mean, it's close enough to what we've seen in the past, I think.
Yeah, it's very close. When you look back historically, September has always kind of been a bad month. Several of the cycles have had drops in September. That whole "Wake Me Up When September Ends" song is coming very true. it is
Dookie
unique.
would be a good fit too. Dookie might also
Yeah,
work. Then.
yeah.
Yeah.
It is unique though, because this is the first time we've ever had an ETF as well. So I mean, not only for good things, but for two of them. Now we have ETH as well. So you know, it is different, but again, like Crispy said, it's rhyming very similar. There's a lot of similarities to the patterns. Yes, we did hit an all-time high. However, it wasn't much more. Like, it didn't explode and go crazy. I think it was just there was a unique injection of money at a weird time of the cycle. So again, we're right on track, and it'll be the same until it isn't. And for the people out there saying, but it's different. A lot of them are saying that just to say, I told you so, after the fact. But if it's the same again, no one's going to call them out for trying to be different. I don't think so. That's pretty much all they're doing, is just trying to be the one who said, see, I told you so. One of these times it will be different, but until we see it really change from what it's been, it will remain the same.
Yeah, I think Bitcoin maxis have that tendency to want to do the "I told you so" thing for sure, and that's just kind of always going to be how their MO. Bitfinesse here, just real quick, because this kind of coincides with what I was going to ask you, Crispy. We were talking off air for a minute about some of the things that you look at when it comes to Bitcoin and Ethereum. Bitfinesse, again, everybody that's involved with ETH, which in other words means like the entire altcoin index as well. Do we have guesses for the ETH bottom now that it's been a full blown downtrend for 8 weeks? 2100, which it's already hit. It hit that in August during that capitulation event that was so quick. It was a month ago now. 1500, 1000. I mean, I personally can't imagine it going below really where it's already gone. I think that's probably what we're going to see. But I am curious your thoughts, Crispy, about what we're seeing from ETH here, because again, that ratio is bleeding. It's at like 0.42 as we speak. It had been up above 0.5 for quite a while until this event in August, where things just really went down the crapper. So what do you make of where ETH is, and should we be worried about this ratio? What could the timeline look like here?
Yeah, I mean, there's so much that's happened. I mean, because when I say that we hit an early Bitcoin top, you could argue that ETH followed and hit a. I mean, it wasn't exactly all-time highs, right? But what ETH got up to about 4K back in March. So that was like early, right? And so when it went early, now we've seen it break back down. And I'm not a super TA guy, but I follow like the 350. The golden ratios, that type of stuff. And if you look back in August, it was bouncing off until it was finally rejected by the 350-day moving average, and it fell below the 350-day moving average. So when you look at it from that perspective, they got some nice wicks down there that were bought back up. So someone accumulated. Anything's possible. One scenario is that, possibly it goes down to the next level of support, which was around the 1600 level, and then comes back up. But really, the game did change a little bit, right? Because now we've got, because you guys have been around for a while, as much as I do, right? When I first got in, there was like institutional, don't even talk about it. My broker was like, we were told we can't talk about crypto. Don't talk about crypto. Right. Well, that's a far cry from now them shilling, ETFs to their clients. So things have changed quite a bit, and the game is always wash, rinse, repeat. That's how it is. That's how it runs. Wash, rinse, repeat. And what does that mean? That means that there is a group of people that are looking to buy what you're willing to sell. And so if people are willing to dump it, it'll go down. But if they hold it, it'll likely settle out until all the others who got out are out. People have loaded up the institutional guys loaded up enough money, and then it'll go up in the other direction.
Yeah. And the point you made earlier, Ewok, I mean, we've never seen this behavior. Like, we've never seen two ETFs like this before. So that's got to throw a bit of a wrench into the cycle a little bit anyway, maybe as far as some of the timing. But anyway, hopefully we do see ETH kind of close things here soon. Let's turn our attention more so to Pulse Chain. So we'll look at kind of where the prices are right now. I mentioned in the intro, of course, over the last couple of days, we did see a brand new low, all-time low for Pulse itself and for HEX, obviously. PulseX, of course, compared to, it's funny. I mean, it's been a full year since we saw Pulse back at these levels after, of course, the corrupt SEC filing and everything. And that's when we kind of saw that capitulation event, and then we saw it kind of bottom out. And now we're returning there. At that time, PulseX, many may forget, was basically half of what it is right now. I mean, it's up 100% off of where it was during those lows before. So PulseX, we know that ratio has been amazing, PulseX against Pulse, and it's holding up now. Inc as well, way better than it was back when Pulse was at these levels before. But we do at the moment have Pulse at 4 zeros and just about a 3.3. PulseX 4 zeros 1620. HEX is just below 004. And HEX is at a tenth of a penny basically right now, which has kind of been wanting to hang right in that area. So we can take it any direction real quick with the pricing that you guys want. Ewok, if you wanted to do just the Pulse chart for the moment, I'm curious. And again, Crispy, I know you're not necessarily like Mr. TA or anything like that, but I'm just curious with your sentiment on where we have seen we've seen Pulse do this. People are forgetting, and a lot of people are upset, understandably so, within this ecosystem. And why is the price so low on Pulse and all that stuff? But we just had a whole conversation about the whole industry really being down right now, and especially Ethereum. So I'm curious your thoughts on this. You mentioned like you get upset with red candles as much as anybody else, but how do you feel about this? And then kind of like I was saying too, the way PulseX is interacting with all this, because it's obviously doing way better than it was at this time last year. So I'm just curious what your thoughts are on these prices.
Yeah, sure. Of course, I don't like that the dollar prices come down on Pulse, right? But I do believe that what we're seeing is Bitcoin affecting crypto, of course, Ethereum affecting crypto and other L1s, and Pulse is directly tied, whether we want to admit it or not, to some of these other things, right? Just because we're in that same grouping of people at the very least, right? So you have the sentiment, not to mention the you have the dollars that are out there that are tied via wrapped ETH, etc. So not surprising to see the numbers come down. Ultimately, I hate to always sound like I'm repeating the same stupid stuff, but it just comes down to, hey, listen, if people stop selling, the price will go up.
Yeah,
right?
That's all it takes.
Yeah.
Well, to that point, and both you guys can chime on this. Like, a lot of people have been saying, like, well, there's still a lot of, hexagons from last cycle that have millions and millions in Pulse. Like, just because this is retouching the low, there may still be downside to go, and they may be selling and stuff like that. I mean, what's your opinion on that?
That's a lot of talk, man. Right?
Yeah.
I mean, listen, I see my bags, right? What I did, I know what I did. Let me tell you, there aren't thousands and thousands of people with millions, right? Mm-hmm. So yes, there's some people have some pretty large bags. Of course, we focus on them, right? That's what we focus on. We focus on those folks and what they do. I think it's more about shaking out the true believers. As a market maker, who wants to come in and just give money away to somebody who's going to dump on you? Not many of us, right?
Right.
So So it really comes down to that kind of thing. It's do you have the stamina to stay in the game long enough to beat the people that are going to sell? And once we have that turn of sentiment, then things go in the other direction. Of course, it's also affected by macros and what people have in real life and what's going on. I mean, all of those are factors.
One of the things I think too, though, is sometimes I wonder, did Richard kind of learn a little bit of a lesson with HEX, and people maybe got a little too rich too quick, and there was a lot of big bags, because at one point we were talking, that maybe this thing could just keep going up, right? The way it was designed, if people would have just sold their yield and restaked and done those type of behaviors, right? It could have continued to go up. Like, it didn't have to dump like it did, but obviously once the snowball starts rolling, it's hard to get it stopped. And I just wonder sometimes if Richard's sitting in the background saying, I'm really in no hurry to get this thing pumping. I'd like to wash out as many people so we're not in the same predicament. Because when you do see a 99.9 whatever % dip, like we're on right now with HEX, it's hard, and it's hard, especially when you're in it for the glory like he is, to get that thing moving back in the right direction, with a lot of holders, right? So sometimes I wonder if we're just gonna let these people shake out, and it could be a very extended dip like this, or even stay in these levels where people just get so frustrated where they do get out. I've often kind of thought that he's a smart dude. So how well is he playing this in the background?
Yeah, 100% there. Well, listen, those who are most upset about things probably are the people who are hodling liquid on things
Mhm.
and not putting the crypto to work. Now, of course, we understand, I think between the three of us and probably your viewers, that the whole reason HEX was invented was to give you a reason to hodl longer, to stay in the game longer. And it
Mhm.
is it is talking about delayed gratification. And I do get a lot of flack from people who are more willing to consider, hey, they should sell tops and buy bottoms, and sell tops and buy bottoms. And I don't dispute that that's a strategy, but it's very stressful, right? And you have to know, some people do know what they're doing, but you have to know what you're doing to be able to capture it. But HEX by itself, I mean, if you go back to the big payday guys who we really would pick on, I mean, the APY is amazing. It's something like 60-70% on the stakes, depending on how you set them up and the length of time. And most of them will close out, the older one, the longer ones at that 70 percentile. So you have to wonder that over 5 years of 70% APY, um, is that enough to steady the market? And at least from what I look at with the core HEX users who are using HEX not for speculation, but for staking, they're not getting out. They're not capitulating. Sure, there's some. There's some. Yes, we did have an increase in the amount of penalties, but the average is right now something around 4.5 million a day. That's up from 4 million over the lifetime of the HEX contract. Is that, so do we see capitulation? No, we don't. So we have this very core group of people, maybe it's 1,000, maybe it's 2,000 people that are holding on to their stakes. It could be more, and or adding, right? Because we just saw the most number of Quattro Cincos made last month in all of 24. And so you have this opportunity to put this capital to work. And HEX, of course, is my choice where I put it.
Yeah, I think I'm interested in what you said about, like, you being one of the people from last cycle, knowing where your bags are at, and the talk of these people saying that, like, oh, we have so many investors with millions left to sell. Yeah, I think that's kind of just tired bear talk, like with the chart being as low as it is right now. And people are going to. It's just, we have to remember, and I heard somebody say this today, and I thought it was a great point. Like, the people that are trying to onboard you at the top of green candles, like, a certain alien token that's on Pulse chain right now that's doing really well. A lot of people are talking about it. So, that's happening right now. And then, of course, when you're at the lows like this, people are going to try to FUD you out of your bags. And I mean, it seems like that's basically been happening for 3 straight years, really, because crypto's been going down mostly during that time. But yeah, you just have to decide at the end of the day, like, how convicted are you? And you also brought up the point of, like, if you are locking up or staking HEX, same thing. Even though providing liquidity with Pulse and PulseX right now, you can pull that at any moment. It's not like it's locked up or anything like that necessarily. But that's another thing you could do to put a barrier between yourself and, like, making unwise choices, kind of. So, yeah, I don't know if you guys have any final thoughts about where we are with prices. If not, we can kind of move on to these PulseX updates. So,
yeah. Hey, what I would suggest to everybody is this: is we don't have much else we can do with the Pulse price other than look at it in USD, because that's our connection to the outside world. But I would urge people to switch to the Pulse view. In other words, look at your tokens, HEX, etc. You'll see a much different viewpoint, right? With what they're valued in terms of Pulse, and it's a totally different looking chart when you look at those things. I think that's an important point to bring back to people, because a lot of folks are upset that they might have swapped into this or that. And overall, what you're looking for is an increase in Pulse price over time. Like, that's a great one with with if you go on Pulse, yeah. So you see how PulseX tightened that up, and now it's coming back down. And then for the people who did decide to come over and do the farming, like PulseX farming, that's fantastic, right? That it cycles through like that, because you're correcting the impermanent loss in one direction, going in the other direction, etc. And my ink farms right now, I'm very happy that I'm not losing as much ink, right? I'm actually gaining, depending on what's happening. So yeah.
This
I think
chart is interesting in pulse terms. It's really just done a whole rounded bottom and just flattened. I haven't really looked at this one much, but that's a quite interesting pattern. It's not doing a whole lot.
It looks better. Well, I guess it looks a little similar, but I think it looks better than the INC versus USD chart anyway. So I guess that's kind of good. But also, and you mentioned, Crispy, about like Pulse, you don't have much choice to look at it other than against USD. I think looking at it against Ethereum is also something that we can do too. And at least we are, despite Pulse being at new USD lows, we are seeing Pulse start to gain on Ethereum now, and that's partially because we have seen Ethereum just, capitulate last month basically, but you still got to look at the chart, and it looks like
I can agree with that a little bit. Yeah, I can see that, because I'm looking at just looking at Pulse right now. Pulse right at the moment is a buy with ETH and Bitcoin, right, because of the way that they've performed. But yeah. I mean, and that just is demonstration of how that ratio has come down or moved.
Yeah.
Well, it did have a nice little a nice little pullback. I mean, when you zoom in here on these last couple of days, it did get bought back pretty quickly after it touched that 3168 level. It actually went down a little bit, 3103, but it kind of rebounded nicely. So that's at least a positive thing to look at. I mean, I know that we're down at the very, very bottom pretty much that we've ever been, but it is good to see it find a little bit of support here.
Yeah, 100% there.
And I think too, people need to, I know it's easy to forget. We were just having a conversation and through text the other night about this, but people are afraid of catching the falling knife right now and see Pulse going down or whatever token it is they want to buy, seeing things going down. And my philosophy is, personally, again, anybody else can do whatever they want, but I mean, we are in the bull market now. And if you've ever experienced like a true bear market, like the one we just went through, that's when you really feel like you're catching a falling knife, because you are basically, I mean, it feels like death every single day, and it just keeps going lower, and you want to see a confirmation. And the fact that we're in a bull market, and there, despite some of the bearish sentiment right now, we are still in a bull market. So it makes me a lot more comfortable buying dips, because when you zoom out, I think we're going to be perfectly fine when we head into 2025. So I think people need to keep that perspective a little bit, that we are in that kind of market environment right now.
Yeah, I've been following the Mayer multiple on Pulse for a while, and when I look at the Mayer, which is a comparison to the 200-day moving average, not an exact fit for Pulse Chain, but it works well enough. We crossed the line into what I would call accumulation back at the end of April, and since then we just been moving around in that area. Based on the dollar, and so yeah, I would agree. We're kind of waiting to see, are we gonna see a buyback? We're gonna see accumulation. I don't think there's, from catching a falling knife perspective, if you have a long enough time frame in mind, this is probably a great time to accumulate.
Yeah, and just looking at that Pulse chart, I mean, we've been saying it for weeks since we kind of started this double bottom process. Like, this is we've been basically near all-time lows for a couple of months now. So, you zoom out and look at the chart. I've been wanting to auto buy everything, over the last couple of months. So I'm with you.
Quadruple bottom.
Yeah, there you go. Quad bottom. If you guys are enjoying the stream so far, do us a favor and smash the like. We appreciate you guys being here. We do the show every single Wednesday night at 6:30 p.m. Eastern Standard Time. Show Crispy some love and hit the like. Let's get into some of these PulseX updates. So some interesting stuff. So this kind of came out of the blue. Richard did tweet out the update the other day, version 7 of PulseX. On the face, we basically got a new user interface. It looks like things are moving a little bit faster, but more importantly, new stablecoin pools and stable swaps are actually available on there to help minimize slippage with USD trades for bigger money that may be coming into the chain at later times. I don't know what you want to show, Ewok. We could actually, if you wanted to pull up PulseX and just to show those features for a moment, you could do that. I know we had a tweet that we could look at as well, but whatever one you want to pull up. But I'll direct it to you first, Crispy. So these changes really are like the most significant changes and updates we've seen to PulseX, I think, since it's been launched. I mean, a lot of people right away were like, where's the single-sided staking, and complaining about that and everything. The buy and burn's been doing its job. We just looked at the PulseX versus Pulse chart. It has gone from, it was at a 1-to-4 ratio at one point back towards the beginning. We've been below 1-to-2 even recently. We're at about 1-to-2 right now. So, Crispy, I'll start with you. What do you make of these updates? It's interesting that it's coming right now because, usually Richard being a marketing guy and the team, whatever they have already developed or are working on, you want to push out when things are starting to feel bullish. Things don't necessarily feel bullish right now, but this is just one update. We have Pulse at its all-time low at the moment. What do you make of these changes, and what is the real reasoning behind these being implemented right now on PulseX, you think?
Yeah, sure. Well, I would like to say something super positive first. I know we're all frustrated, but thank you to the devs who are actually working on this. They probably don't hear that enough. Unfortunately, with the people who are doing the development and doing the work, most times people are going to call you to complain, not to tell you you're doing a great job. So there are some really strong things about PulseX. Yes, there's some slowdowns, there's some data stuff, there's some things that I would like to be better, and I'd like to see all the different features implemented. And so this is part of that roadmap. But thank you to the devs for doing that and working on it. So in particular, I think somebody else has said this, and I'm probably stealing their words. Bringing the stable swap kind of brings us to kind of like market level, what you would expect in most markets to be able to have the stable swap. And it's very exciting to see it. If you had to do swaps for different tokens, you would have observed that you get better deals depending on which stable you're in, and that's dependent on who you are or who set up the liquidity pools and what you're swapping to and all the rest. And then from a sheer pain in the ass point of view of having to swap from one to another to get where you want. Maybe if you're using Poised, the aggregator doesn't pick up the pair. I mean, there's all these different things that are going on, and so you're getting extra slippage, right? Just by the fact that you had to go between the pools. So having a single pool that's unified, particularly if it gets mega sized, be very good. The lower fees are also very attractive. A lot of people probably wrongly assume that V1 pairs have no fees because they forget about the burning, but they have fees, right? So the V1 pools are a 0.25 fee that goes all to burning, right? So now if you have this stable pool that's out there that's only taking a 0.1% in fees, you have a cheaper alternative to be able to get to the pairs you want through USDT, USDC, and DAI. That's just right in the beginning if you're going between those two. And then of course that spreads out across all the different tokens, all the pools that are out there. So I think it's very bullish. I think it's a move in the right direction, probably brings us current with some other protocols, other layer ones out there. And like I said, it gives another alternative and an attraction for people to bring stables into the system. And who's to say we won't end up seeing a farm at some point? That's a possibility as well.
Yeah, I think so. Ewok, go ahead.
No, yeah, I totally agree. And this is something that will ultimately help bigger whales, bigger buyers start to look at this. Because if they do have, say, for example, $100,000 in USDC, what it's going to do if they want to buy with that is it's going to split it across the different pairs. So even if there is, say, Pulse versus DAI, Pulse versus USDC, Pulse versus Tether, it's going to split it and break it down so that they still get a better transaction, with less slippage. It will route it through the right pool, whichever has more liquidity, and help them as well. So, this does definitely favor the bigger buyers to get a better deal. So, although we did have
100%.
we had Poised before, which would do that routing for you. Now a stable pool incorporated into that is going to be even that much better as well. So we have to remember that this is definitely going to help some bigger buyers take a look at this now.
Yeah, it's going to be pretty cool because and Poised is already working on integrating it.
I saw
And
that.
so,
Yeah.
yeah. So, I mean, at some point here, the aggregators will be able to leverage it. The ARBs, our bots, if they weren't already able to do it, will be probably set up to do it. And so it's just going to help create a more efficient market.
Yep, for sure.
Richard, because he's helping coordinate our show tonight, I kid, but he just tweeted actually about this topic, Ewok, and I just DM'd it to you if you wanted to bring it up. He just talked about the stable swap stuff a couple of minutes ago. Yeah, I think he's kind of just demonstrating what it will do. But he's saying, I'll just start reading it as Ewok brings it up. But he says, why does the new PulseX 107 stable swap protocol code kick ass? Left side has stable swap off and 0.8% slippage. Right side has it on and 0.51% slippage. That's 36% less slippage. And that's with quite little liquidity in the stable swap currently. More liquidity, less slippage. So he's really just demonstrating it. But I mean, again, like you just said, I mean, maybe for like smaller time buyers or just, the percentage ends up being a lot of money, the more money is injected into the ecosystem. So I think it's a good demonstration.
Yeah, 100%. He had posted a number of times about this subject, giving people direction, and I shouldn't say direction, giving people understanding that if you come over with DAI, you'll get a better deal. Right. Mm-hmm. And so I saw this as kind of an extension of that. And then recently came out and explained what the differences were between the different tokens and splitting it up. And so I don't do a lot of heavy, swapping with lots and lots of dollars. But even at the level that I'm at, when I do something, I can see the difference,
Mm-hmm.
and how I'm getting hit with fees. And so multiply that by 100 or 1,000. You want somebody to bring $1 million in? They don't want to lose $50,000.
Right.
Yeah, I'm making up a gross number. I don't know what the numbers would be, but you don't want, you got to pay more than a few points. It's not attractive, right?
Yeah. Yeah, I'm with you. It's just good really to see an update of any kind, I think, to PulseX at this point. I don't know how many people saw this one coming right now, but I think it's one of the most bullish things. I mean, really, if you think about it, it's probably the most bullish thing we've seen for PulseX since its launch, because we really haven't seen too many things announced on it yet, other than just it doing the buy and burn, which no other DEX in crypto really is incorporating. So awesome to see this for sure. I don't know if you guys have any other thoughts on any of this, let me know.
Well, yeah, I do. Yeah. We were talking about this a little bit before we got started. I also think with Richard playing, or I should say the OA playing around with the SDAI protocol to earn a little bit of yield before things got kind of started, whatever. I think there could be something like that. I keep seeing these videos about Richard saying, I've got some things up my sleeve that I want to do. And, it just makes you wonder what they are. Now, he's obviously, I don't want to say he's not in a rush to get them done. Brett, I saw recently was away on vacation, just posted that he's back to work. He's one of the main developers that we know of anyway. And, it's cool to see some of these things appear, that looks like a lot of and even the little things, right? You've got logos, all the coins now. I don't know if you've seen it, but when you trade, here, let's share this. All your tokens, they all have logos, a lot of them didn't before. So those are all, there's your Hexfire IO. I think that one was updated before, right, Crispy?
Yeah, about a week ago they came in.
Yeah. So all of these tokens now have a nice logo with them instead of just a blank. So it's the little things, right? Little things, they all add up, and it's like, how do you eat an elephant? One bite at a time. There's a lot of stuff to do. So it's good to see all these little things adding up. Eventually we may see single-sided staking. But again, you don't want to give people that option. I don't think at this point. I think you want to do that more in a bear market. Give people a reason to lock it up instead of dump it.
Yeah, there's some argument about that as well as V3, if that's what you meant by single-sided. I don't know, but V3 LP as well. That's an
single-sided staking is what I was getting at, not necessarily liquidity, but yes, that would be nice too, to have the single-sided liquidity. So
yeah, I think you're right. I mean, listen, whoever they are, who's designed the whole thing, you assume is Richard.
Zemzer.
Right? But whatever's. But yeah, I mean, you imagine they have a big list of things that need to get done, and they prioritize them into the order they need to get done, and they need to be worked off, and some will be strategic, and as to when they take place, etc. But I don't have any insight other than what everybody else sees. Into what's exactly happening. But yeah, I think all those things will come. And then in the meantime, I don't know, man, this is a juggernaut. I mean, I hear people complain, and and I see the FUD out in the X, but man, you just go look and see, the sheer amount of volume that's going through, the value that's here. I mean, it's real value.
Yeah, and I think people are definitely discounting the community and things like that too. I just saw somebody comment earlier today, like going around looking at other communities and realizing there's nowhere near the fever pitch that there is in this one. It's just that prices have been depressed for so long that people are forgetting. What did Briz say? What was what compliment from Briz there?
He said Ewok's answer to how to eat an elephant is way better than mine. I was thinking you start at the ass.
There you go. Yeah. Perfect.
Always at the tail, Bruce. Bruce is always right. I'm sure that tastes the best. So.
Yeah. Get the worst part over with first. All right. So yeah, great stuff. Happy to see this from PulseX. We're going to see certainly more, I think, as I mean, again, if we're seeing something like this launch right now, when sentiment is as low as it is and prices are as low as it is, I mean, I think we're going to see a lot more, like you just alluded to, Crispy. So,
and no one's talking about the little update that happened on the go.hex as well. Now that it's also working on the Ethereum side, which it wasn't before. That's a nice little update that no one's really talking about. So there are things happening in the shadows, and it's fun to see all that kind of as it plays out.
Well, let's talk about that. Go ahead. You just kind of went into it, because I don't think we really got a chance to talk too much about the HEX update. I don't remember when that actually happened. The go.hex.com front end update. So I'll get you guys on this. This is nowhere near, like the PulseX updates anyway. But yeah, essentially we have had an issue for some time on that front end where Ethereum stakes were not loading on there. You weren't able to bring them up, and to start end stake on Ethereum, Pulse Chain was working flawlessly. But that has now been resolved, which is awesome. A lot of people were having issues with that. And again, that's one of those things where, it's unfortunate that it wasn't working, but there's also plenty of other front ends out there that you can use, because all you're doing is interacting with a smart contract. And I know we got comments on some of our videos asking about how to do that before, and we provided some good resources, different ones that you can go to. And there's, they're all documented on a website and stuff like that too. So there's plenty of resources there, but it is working now. We also saw some of the language kind of shift on go.hex.com. That whole "the market has chosen" thing has been removed. Yeah, I found that one pretty interesting. Since the RH kind of EHEX kill tweet a few months back. Also, the language about HEX being better, it says something about, I didn't read the whole thing, but being better than gold, BTC, it's a certificate of deposit, things like that. I'm curious, why do you think, and it's kind of coinciding with the PulseX updates, but why do you think we're seeing these updates right now on the HEX site? I mean, either way, to fix the Ethereum side is awesome, but what do you think we are going to see in terms of updates on the HEX site, and why this now? And then I actually have a follow-up about EHEX that I want to ask Crispy, that I think will probably get us really into all this HEX conversation. So what do you make of these updates first, though?
Well, again, the main developer was away. He took some time off, I believe, and when he came back, there was probably a list of to do, a honeydew list, so to say. So I think I really think that's probably what we were waiting for. The hex thing was not a major issue, like you said. We have the Hedron website, we got Maddie's tshare.app site, we got several front ends that work. So I really don't think it was urgent. It was a whenever you get back. It's. Do you think it was urgent, Crispy?
I just think about, like you and I,
Visibility.
we could figure this stuff out, right? But I feel,
Mhm.
I saw so many people coming into the chats, and they're kind of like they went there and it just doesn't work, and you're forcing them down a path outside of our channel, outside of the Hex channel, to go do stuff. And it's okay that those things exist. So I think it's good that that part's fixed.
Yeah.
I think the rest of it is clarifying the messaging, right, on the page.
Yeah. Yeah, no, I think it's great that it works too. And that is one thing. When you say, well, our main site isn't working right now, but you've got all these
Right.
other ones that are.
Yeah, it kind of gives you kind of like, yeah, yeah, yeah.
Yeah, why isn't
Yeah.
it working? It kind of makes you wonder, or what's going on that it isn't. So
Mhm.
yeah, I mean, I see where you're coming from with that, but again, it's good. It's totally good to see it, that it's up and running and
Yeah,
everything seems
100%.
to be working flawlessly.
Yeah, and that is for anybody who has been having issues, because again, we've seen comments about that on our channel. But if you're having issues with viewing your hex stakes on Ethereum, um, actively going to stake, unstake, whatever, if you go to go.hex.com, I would recommend, I think all of us would say this, to actually download the version of it and run it locally on your PC, and then you can have at it, stake, view all your stakes, and stake, start a stake, whatever it is you need to do. So that's all there now. I'm going to kick it over to you, Ewok. Yeah, let's get into some of this hex stuff. The question I had that we can get to maybe at some point is the EHEX versus HEX ratio, and how EHEX is now starting to make a comeback unthinkable against HEX,
Uh-oh.
which is interesting. Maybe we'll get there eventually. I don't know if we want to start there, but I'll throw it over to you, Ewok. What direction would you like to go with HEX here
Well,
first?
no, go ahead and it is a good
Okay.
place to start, I think, because it was, one of my topics that I had written down too. If Crispy wants to bring up any kind of
Yeah.
metrics or anything like that, we'll give him a second to get whatever he wants
Oh,
loaded.
sure.
And
Let me share the screen. Then we can start. We can pop around, look at some
sure.
different stuff. I'll share it over to you. I'm pulling up the T-share chart for Johnny Chaos.
Yeah, I
Oh,
saw
there you go.
Johnny mentioned that earlier, and while you're doing that, I don't know if anybody, um, I, I don't know if anybody acknowledged what he said is basically, though, you don't have hex. Here it is. Technically, if your hex is staked, you don't have hex. You actually have T-share. So you should look at the T-share chart, not the hex one. So he does nail that on the head. When you're staked, yeah, your hex is burned, as we all know. We're going to add this to the stage.
There you
There
go.
All
you
right.
go.
So you guys let me know if you can see this well enough. Otherwise, I'll expand it and make it a little bit bigger. But just looking at the T-share rate, I have this up on the site now. I think maybe it was Johnny. Somebody was talking about a few weeks ago. So I've added both of them to be able to track and just see what's been happening this year with the cost. This is in dollars, not in Pulse. Just see where we are overall price wise. And so when I put that up against what I call, I use the Mayer multiple a lot. So you can see, not optimized for this screen, but back since about that April timeframe, along with Pulse and everything else, went way into the accumulation zone in reference to price. But in general, we just see that in dollar terms, it's been trending downwards with price, because that's to be expected. But it's quite, what's the right way to say this? It's not intuitive. It looks like it's cheaper, but it's getting more expensive in HEX. And so I've been beating the drum on both EHEX and PHEX, by the way. The idea that if you're interested in those protocols long term, now is probably the best time. Cheapest units and cheapest T-share costs to be able to get out there. And actually, people, I don't think they were listening to me exactly, but they did get out there and respond. We've got 40,000 T-shares on EHEX going out Quattro Cinco now. and 25,000, almost 30,000 on PHEX. So yeah, it's been quite a ride. So we have this core group of people, maybe about 1,500 users. Again, hard to count because we don't know, but that are actively staking long term and taking advantage. So in the run-up period, when prices went insane, everybody, many people would have looked up and said, "I wish I was a dolphin." Because dolphins were in a pretty good position, regardless.
Reminds me of a famous South Park episode, but
yeah, well,
anyway,
was a dolphin.
a little too literal.
But I mean, at this time, right? In 2039, if you look at the split and what the number of t-shirts are out there, it's less than $200 to be a dolphin. And so the longer this situation continues, for those who have very long time frames, plan to be around for the next 2 15-year cycles, the 15 and a 15 or something like that, God willing for them. It's a huge opportunity to be the whale, to be the dolphin, to be the shark way out there. And even if other people, because other people come in and jump on, by being involved long-term now, you maximize your ROI as compared to coming later. Because I do remember when it was almost $10,000 a t-shirt. So if I was coming in with fresh capital, I would have had to put $10,000 in to get enough HEX. And that could very easily happen again with a run-up. So in any case, I find it very, very reasonable right now.
And to be a dolphin at that point, I believe it was 1,000 T-shares.
Yeah, it was a little bit over 1,000. It's been coming down ever since,
So you're looking at $1 million to be a dolphin at that point.
Yeah, in fact, we can take a look real quick and see what the drawdowns look like. So if I look at the PHEX, for instance, this is not a prediction of. Be very clear what this is. Not a prediction of what we'll have for T-shares. This is what we have for T-shares in each year going out, right? And so I should say that I know the number. And so what I'm able to do is say, well, right now we have 9.1 million T-shares. So a Poseidon right now is 915,000, right? Well, to be a Poseidon out in 2039 on the Pulse chain is 2,800 T-shares. And if you go all the way down to a dolphin, it's less than 3 T-shares, in 2039. And so what we've seen is we have this opportunity. Again, people need to take care of their lives first, right? I mean, crypto's risky, so I don't think I'm giving any financial advice for people to go headlong into crypto. And you need to understand what you're doing short-term and mid-term, right? Because you have to have those goals. But it's also good to consider the long-term. And if you're interested in the long-term and you've got all your stuff covered, to me, it looks like a hell of a deal to get the most HEX possible by getting in now, because what you end up seeing with these, because you see how the numbers are laid out and they come down. And before I move off this, do you have any questions about this? It's just doing the standard calculation for us.
Well, so it was actually kind of part of a question that I had. How, with as we get closer to that date, obviously, you have bigger players that do their rolling short terms.
Mm-hmm.
How do you think that affects it, along with the T-share rate at that time? Like how high do you think the T-share rate is predicted to be in 2038, 2039?
I expect it'll be 300,000 and ish on both chains. So
per HEX per T-share?
Yeah, HEX per T-share.
Okay.
And if you apply dollars to that, however you want to, that could mean that a T-share is $100,000. It could mean if HEX is $3, it could be $1 million for a T-share.
Sure.
I mean, there's some asymmetrical freaking possibilities here that none of us can control at the moment individually, right? But the idea that you could be locking in, reward levels, APR going out into the future, somewhere in the mid 20% range for the very long ones, rising over time. Because that's the other thing a lot of us forget. When we first get in, you have an APY, but your APY floats up as the payouts go up and the number of T-shares go down. And so and I always think about what's it going to take for people to come in from traditional finance, and I think the higher the APR, the more interest there'll be, and it'll correct. Now, to your exact point about what will happen, so let's just assume we have the same kind of demand going forward, and for the moment, right? I think it'll change, but let's just assume. Well, then in 2040, you'll need 3 more T-shares to be a dolphin in both those years going forward until we run out of the ones in the front. And then the year after, if it was the same, you'll need 3 more T-shares. Not an incredibly hard lift, right? $200, right? I mean, it probably almost there's portions of the world that can't do this, but for at least in the West, almost everyone could get 200 in 1 year in. So there's an opportunity to really take advantage of that and become the larger holders in the future. Now, the other part of the question are these short stakers. Now we do see a considerable amount of short staking, and so I'll flash this up to you first to show you the difference. So these are T-shares that are expiring and what the drawdown looks like over time on PHEX. And so in 2024, we still have another 686,000 T-shares on the chain that'll be expiring in this year. But you can see the kind of distribution that's here. And one of the things I'll point out is that, of course, the trend could change, but in general, T-shares are deflationary because the cost of T-shares go up in terms of HEX. So they are deflationary. So we'll see a trend in the downward direction. In terms of when people stake and how they stake, we've seen that the 2024 and 2025 numbers have gone up as people are anticipating either they want to get that short, the short amount of rewards that are coming in, or they want to be ready for a high in 2025, right? So you see a little bit of jump there. Now the question is, well, what happens when these guys keep doing that? Well, here's the hidden piece. I think most understand, but here's the thing: when you end a miner, right, a HEX stake, you can't almost always, if not always, I guess the way the calculation works should be always, you cannot get more T-shares if you go out for the same number of days and you were to stake all of your principal and all of your rewards. Right. And so some of these short stakers, because of the way the T-share rate goes up, they might lose 2%, 5%, 10% of their T-shares. All depends on the time. And we can actually look at real examples, kind of detailed, but we could do that. So their power to really offset the future T-shares becomes less and less as it goes up. And so, so I think there'll be some strong effects. But what I would bring bring attention to otherwise on this is how you see in 26 and 27 we still have this gully, where we have this line down there. I guess I could probably draw on the screen, but we have this kind of like a little bit of U shape right there. That's not very very bright, is it? Let me go to yellow. Anyways, you see now I'm writing all over the screen. You see how
anyway, there's a gap for a few years.
Yeah. And so we have this gap. Well, here's the thing, right? That happened, of course, we're in the beginning of HEX, right? People set up their ladders and they went into the future. That demand at that instant is very high to get more T-shares. You didn't see 26, 27, 28 get filled in much. And so then after you get past the 10-year point, most of us figured, hey, if I'm going to go longer than 10, I'm going 15. Right. So now you have this other gully that's here. And so what's happening is people are not coming back and filling these in at the moment, as far as rungs go. You have some people creating new ladders and they'll come in and do that and fill them in. But you can see that there's still much less, right, in terms of T-shirts.
Yeah. Something else I'm kind of surprised at looking at this chart is the fact that so it would be what, 2023 or 2033 is as low as it is, only because if the 4-year cycle repeats itself, our next one would be 2029, and then the next one would be, I guess it'd be 2032.
No, it was 29 to 33, right? 4 years.
33. You're right. 33.
Yeah. You know,
I was
you're
right. I was
You're
right the first time.
You are right.
So I'm surprised that one isn't a little bit higher. Just knowing for people to say, well, I'm going to stake it for 2 cycles, for example. I wonder if they're that maybe just uncertain if the 4-year cycle stays, or if they haven't thought about it that way quite yet. I wonder.
Well, I think when we were all running around in the beginning, like, listen, I was like, 15 years. What are you, nuts? Right.
Mhm.
I mean, it was like, I was like, oh yeah, I'm going to do everything Quattro Seco, right? It was kind of crazy talk. But I certainly understood getting 3 times as many t-shirts.
Sure.
So that's the 10-year mark, right? So I think a lot of people had
Yep.
this journey.
Yeah.
And then as I learned a little bit more, I was like, oh, I get it. 15 makes sense, right? For that reason. And then did have some people come in and of course do their ladders and fill in some of the time. But you're absolutely right. Those are pretty low numbers out there.
Yeah.
You know, and that's going to be opportunity in those years, because remember, the only people who get get the inflation are stakers.
Right. Yep, exactly. So let's talk about some of the metrics that you're seeing that are actually going up. And by all accounts, I believe average stake length is going up. Number of stakes are going, or stakers are going up. And I think the number of overall wallets are also increasing.
Yeah, I mean, there's some, there's a mixed bag of information, right, with this stuff. So let me pull up. I just want to see if I have my APY on this chart, or actually not APY, but the amount. I'm going to switch to a different chart on my site real quick here. But yeah, I mean, the metrics are pretty cool. I mean, I like how they're moving along. I did some comparisons on the average stake length. So let me pull up my pulse chain charts. I had too many up here. I gotta actually think about where I have everything. We'll pull this up. I actually did this for one of the chats. I had some people asking, some clients were asking about it, about what, what we're looking at for the average. And so it's really important to talk about the average length in a way that people really understand. Okay, so I don't deny that this is bullish, but it does not show us the opportunity that's there. All right, and so why do I say that? I find it's bullish because people haven't crapped out and ended miners, but this is a measurement of open stakes. So the average staking length is a measurement of open stakes. If I made a 3-day stake and I end it, it's not here.
Right.
Right. And so you have this flurry of activity that's taking place. And what we're seeing is the residual stakes are getting longer and longer. Right. It doesn't mean that people aren't staking long term. But I think when you actually look at, and I'll pull up the other chart that I had done on this to show this. When you actually look at the comparison and what's really happening with it, I may not have it here on this one. I thought I did. I wanted to show you the comparison chart that I had made on this. What we're seeing is that we're not getting as much staking as you would think. I may have put it in here. I should really have separated this one out so we could actually see it separately.
So
and I might have to pull it up. But what we're actually seeing with the staking is something around. You have to take my word for it for the moment, and I'll can pass it later. About on average, if you were just look at all the new stakes. And I do have the chart on this one. I'll just show it to you in a moment. But what's ending, and if it's about 2 years, 2.5, 2.5 years, some sort of a range like that. And how I can show you here, I have a much prettier one, but other people, we'll have to do that another time. But this one is stakes by start. These are all the stakes that have started in this year. right? Up here at the top, these are the number of T shares that have been started in each month. Okay, so you can see, it varies. It's hard to pick out a real trend here because people are doing short and people are doing long. You can see on the daily the kind of the counts. It's kind of on a downtrend for the number of stakes. If we look at the HEX stakes by the amount of HEX, it's down. It's trending down a little bit. It's not like crazy high or low, but it's just kind of like trending around, kind of reflects what people are doing. But if you look at the average start length, it's somewhere right around here, right? So we're just above 3 years on that average, right around that level. So 2.5 to 3 years on both chain. So that's what's happening. That's what people are doing. And so if we go look at the Quattro Cincos, right? So they see this chart. This is Quattro Cinco, right? We saw a good 4,760 T-shares last month get created, Quattro Cincos. But if we look at it versus how much was actually staked last month, it was 236,000 T-shares that were created. Just to give you an idea versus all and the longest ones. So most T-shares, vast majority, much shorter than 15 years. Yeah. And I do have a new request that had come in from a client to actually quantify this a little bit differently, and I'll do that. But what we're getting at is what we're hearing is true. People are short staking or holding liquid. Not as many people are putting in stakes. Kind of like, maybe it's not trending down or anything, but they're certainly not going long with it. And the result of that is huge opportunity again for the longs.
Right.
Right. The way it works. So, all right. So this chart. Cool. Now you asked about adoption. So if you have any questions, ask about this while I find this other chart.
I did have a kind of a quick one, and maybe it was like in the data there and it's just flying over my head, but like with the averages that we're seeing, like 2 to 3 years or so of stakes, is I guess the best way to ask is, like, do you think it is a relatively consistent number of many people are staking for about that length, or there's a huge disparity? I mean, from what you just showed us, I think it's the latter of these two things, but that we're seeing still some hardcore 5555 still out there, and then people, it's more so just widely dispersed, like really long stakes, very short stakes, and people not staking at all, rather than just kind of condensed in that a lot of people doing 2, 3, 4 year stakes or something like that.
Yeah, exactly. I'm going to go after the data a little bit more succinctly so we can show it. But I think you've described it correctly. If people are staking, they're tending to be very short, so you're not seeing as much of the laddering going on, or they're tending to go long. But the long is still just a spit in the bucket. The real long Quattro Cincos. And crazily, we have more T-shares on the EX side than the PX side, about almost double. So that really is accounted for by the number of units, because those folks probably feel like, hey, this is how I feel. If it's going to survive, man, I want the most. I'm going to get the most I can and be in there and ride it out. And yes, I do realize our home is Pulse Chain, right? And Pulse Chain is really the mama here, right? I mean, EX is a side residual play at this point, but you can't discount that there's going to be huge liquidity, and is huge liquidity.
Right. You also can't discount the cheap gas fees that we've got right now either. And I'm sure that's playing a little bit of part in that as well.
Yeah, it makes you wonder just how big we were, because we pretty much picked up camp and moved to another chain.
Yeah,
the HEX community, and I think that does have a big effect. Probably not all of it, but then again, hey, listen, if you see Ethereum at 20 grand, I don't know, gas is going to be cheap. I mean, we were guessing that if we saw those kinds of numbers, you might be looking at very high end stakes, et cetera, et cetera.
Yeah.
So we'll just have to play it out and see. But it's definitely still part of the ecosystem. We'll watch it. Looking at the adoption chart, And we have here, again, this is just a measurement of addresses. So it's not, exactly scientific, but you can see as we get into August, we started seeing a rise in the number of addresses that have shown up on the Pulse chain side, up to 123,000. Still below the highs, so that we had.
What was our high there? Like
around 24, almost 125,000 wallets.
Okay.
But it's really hard to make a conclusion just looking at that what's going on, per se, because they're just numbers of wallets that are engaged.
Right.
And I see lots of wallets for whatever reason that do very funky things, very small numbers, multiples. We also get boosted quite a bit with HSIs, depending on the HSI, because every HSI counts as its own address in this particular way this one's measured. Now, what has been going up pretty crazy, like, has been the holder chart. Let's see if it's backed off a little bit. Nope, it's up and to the right, boys.
Yes, it is.
So,
very erect.
Yeah, it's very, very green and erect.
Yeah.
And so, people are accumulating. This is something that you see both from, again, this is addresses, so may not apply as much to market makers unless they're very sophisticated. But this is what you see with people who are doing a cycle trade, or market makers, right? You begin to take the HEX off the market and put it into wallets. Now some of it's finding its way into LP. But yeah, this is what you would expect at this kind of time frame with, if people believe that there's going to be a chance to make money off of it, this is what they're doing. They're going to grab the HEX and hold it, and try to capture whatever value at whatever top there is. And you see a variety of things happen on Ethereum. Ethereum looks a little funky in the number of addresses, but it generally up and to the right as well. But nowhere near the type of accumulation.
Right, but we are starting to see a trend form again. It seems like it's kind of, it was trending upwards, and then I believe that March area was where the tweet was made, right? Where the where the market has decided, and now it's like, well, we're kind of starting the uptrend again. It's kind of interesting.
Yeah, it is really beginning to kind of move in that direction. One of my favorite things to show, because I am really interested in HEX adoption and what people are going to do. Now, this is a little dated. Even though it has today's date on it here at the bottom, I haven't gone and captured. Well, there's actually the HEX miners, isn't it? Yeah. So this is up to date. Sorry about that. So this gives you an idea. I use this because you can pull up a visual if you do a search online for certificates of deposit.
Mm-hmm.
You'll find a chart that looks like this. This is what our chart looks like, right? Roughly, me give or take a couple points here. That if I come in for a very short period of time and I do a HEX miner for 30 days, the APY will be right around that 7.74, and if I go as long as 5 years, 11.6, and I guess, 14.6, sorry. It kind of messed up on my screen. 14.6. So in my mind, right, when I'm talking to people, I'm comparing this to what you get for certificates of deposit.
Mm-hmm.
And we were talking last night on Maddie's stream. Longer pays less right now in CDs, but in HEX it doesn't.
Yeah. Total inverse. Yeah.
Yeah, it's kind of crazy. So you can kind of compare this to other places. And so my big question is this: if I laid this out properly for you guys, yes, I see more wallets. Yes, I see more people picking up HEX and holding it liquid. But I'm not seeing the staking, right? And like you guys, I try to be really aware of what's going on. I'm participating in a bunch of stuff. I know what I'm getting for LP. I see what's happening with farms. I'm understanding some of the risks that I'm taking. I'm seeing what I'm doing with validating, and percentages and all the rest. And so I asked the question, is just how high does the 30-day yield need to get before it catches people's attention? Right. How high? You know, is it all about the percentage? Is it a percentage? Probably not. Percentage and price appreciation probably both matter.
I think it's a combination of both, really. I mean, you want to see that 7%, but what if you're seeing at one point, every what was it, every 2 weeks or every 40, I forget what it was, we were doubling on average every 40 days. I believe at one point the last cycle. So
Yeah, it was roughly
so
that time.
yeah. So I mean, when that happens at 7% and you're doubling, that's not a bad return.
Yeah, it's huge.
But when you're in a downtrend, 7% doesn't matter a whole lot if you're falling, a few percent every day. So I think that's where the things need to turn around.
I wanted to can I just ask this one real quick?
Go ahead.
And then I by 8:00 I may have to drop here. But I wanted to know, but you're talking about all this short-term stuff, Crispy, and it leads me to this question. And the HEX contract is the HEX contract. Like, it's not going to change. It is what it is. So obviously there is, no debate about that changing or anything. But I'm curious your thoughts, or if you're just kind of stoic and, you're not really worried about it. But do you think there is too much of incentive? Because you guys just talked about like how well you can do even with short-term stakes. And certainly right now, we have a lot of people that were around last cycle. Maybe they bought like the top of HEX in 2021 and are still here and, dealing with that and DCAing down into different things within the ecosystem and stuff like that. But do you think that it's almost there? You can do really well with short-term stakes, I guess is what I'm trying to say. Like, you can still get a good return on short-term stakes. Like, you can get, especially if you're DCing into HEX at these levels and stuff like that. If you want to do just like 30 days, 60 days stakes, whatever it is, because a lot of people have trepidation, obviously, right now, as you just showed with all this data, and like 10-year, 15-year stakes, 5-year even. I mean, people are just not really that interested in punting out right now anyway. I think maybe we'll see that as we get into late 2025 again, kind of a repeat of 2021. But do you think like that short-term staking is too good? And was that like an error of the HEX contract? Or do you just kind of think it is what it is? Because I think there's plenty of incentive there. I'm happy it is the way it is. I mean, because I like to do short-term staking at a time like this. But do you think maybe there shouldn't be as much rewards that are possible for short-term staking, I guess is my question.
Yes. So kind of level set this. So these are annualized numbers. So somebody was asking, this is not the ROI that you receive. So if you do a 30-day stake, you don't get 7% payout. It's the equivalent of the APR that we would have there. So it runs a much smaller number. So yes, it can be profitable, but just like in real life, right? Like we have we're all crypto minded. Like, I got this crypto dust in my eyes, and if I'm not making, 200% a week, what is it? So I think a lot of people don't really even appreciate that it's 7%. Right. Yeah. But if I'm out in the regular market, dude, this is why I'm saying is I'm thinking about how this progresses over time and we get that big adoption. I talked to my broker and she's like, well, hey, listen, what we're shooting for is not the price appreciation of the stocks. We want to make sure we're getting the 8% dividend. Right. And certainly there are things that pay better than 8%, but 8% is pretty good. Right. And so if you're in a situation where you can come into HEX, which is where I like the laddering myself, is that you can come out with a ladder that's on average giving you something around, you can set it up this way so that you're going to get, based on the numbers we have today, 14, 15%, something in that kind of range, right? On average, that's outperforming before you even talk about, the rest of it. Now, when we talk about the short stakers, hey, you know what? We need everybody. So, hey, if you can do it and it fits your mold, this is how the contract's set up with DeFi. Engage for a week, engage for a month. I mean, I personally would tend to go higher because I see a lot of things that don't make sense with people doing it, because they might not even be making enough HEX in order to cover, their costs or whatever they're doing in some weird cases. but I'll show you a comparison with this stuff. Maybe it was on the same one. So if we look at so we know the APYs have been changing over time. There's just another example here, but relatively, Pulse Chain's been pretty steady. That short staking has kept the Pulse Chain in kind of like this 37 to 38 average range. But on the Ethereum, which is in pink, it's gone up, it's more like 40, 44, 43, 44 at this point. And that has to do with, we're just not getting that short-term staking over there. And so one of the jobs the short-term stakers have been doing is kind of keeping this APY kind of steady, right? But if we look at the daily APY, let's see which chart I want to use. I may need to go my other directions. Give me 1 second, my friends. I wanted to do the APY comparison. I have a nice little chart, but that's not the right one. There it is. All right. So just looking at the APYs between the two different chains, and what we're seeing here, right? And so these are rough estimates about how they're starting when we come out, and you can see that for $1,000 value, what the two different chains might be able to give you, and like we were just saying, a 30-day is only paying about 0.61 ROI, right? And so what these short stakers are doing is they're coming in with larger amounts. You can see them growing the amounts, and I suppose in the bull market, it'd be quite impressive, the dollar value as we go up higher in price, what that will be. And of course, they'll affect the market depending on what they do. But I'm hoping what their plan will be is to not kill the golden goose, but to do exactly what we've always talked about, scraping the rewards and using that. But it is crypto and it's DeFi. People can do what they want,
Sure.
But anyways, this kind of gets to that point. So yeah, I don't think it's too high. It really comes down to it comes down to, again, are we or are we not engaged with the primary use case, right? Product market fit of HEX, which is long-term staking ladder, right? And I think those people, we people who have that setup are going to do the best over time. And I think there's pockets where, it might end up being that we have less of a great experience in the near term because maybe some of these people are really getting too much and dump it all. Maybe that's a possibility,
Yep.
And therefore inhibit price. But they didn't do it in 21, did they? And they were doing a lot. They were doing a lot of short. So the market will play its way through this.
So I had one more question, and it's more about adoption. And one of the biggest arguments that I see from people, they continuously say, "Well, this coin inflates forever." How do you convince people that because of the way it's set up, and because it's staked out so long, and a lot of this may never even hit the market because of the emergency on staking and things like that? Give us your elevator pitch on people that tell you that this can never do well because it is a forever inflating token.
Well, I think that's the whole point behind it. It's an ever inflating token. All right. And I think that's the point about HEX in the first place. But T-shares are not. And that's really where the earning of it comes in. And so I think on long time frames with higher lows over time, by getting engaged with the mining and the staking of HEX, you're able to you'll be able to beat the market in that way, because you're really, and I think Lamont, Professor Lamont really said this the best, but Lamont Black, that it's really trading value or giving value to the short timers now in order to receive more later. So you have to believe in some things, like you got to believe crypto's real. You got to believe that HEX is useful. You got to believe in long-term holding and delayed gratification. These are all hard things to believe in, right?
Sure.
I mean, like you're going to believe in 15 years, and
we also have to believe that the OA will never sell.
you have to believe the OA will never sell or will work, in a way that's supporting of the system, always has, so you have all these different concerns that are there.
Cool. Yep, I think that's one of the biggest overlooked things is not the HEX, but the T-share, and I was kind of serving that up to you there.
Yeah, the biggest pitch. I mean, I didn't give you a pitch, which is great, but Johnny has a good one, Johnny Chaos, which is basically this. All right, people, and I have talked to some people about this a little bit on the old X there. Listen, it inflates, it's paid to the stakers, and it can outpace. It dilutes everybody else who doesn't stake. All right. And so if you have people who are willing to hold, if you have more people willing to hold than sell, and you have people that are willing to make a market, then you have value on the other end, right? And the whole thing grows over time.
Yep.
Why do you think there is such a misunderstanding of the T-share? Like, do you think it's just people choosing not to stake that are just seeing HEX, like Ewok said, talking about the permanent, the forever inflation and stuff like that, and they don't actually understand T-shares? Like, do you think for those people, I don't want to say that it's just not worth it to even hold HEX if they're only going to hold it liquid, because if they want to buy it, I mean, we've seen it do a 10,000x already in the past, and we think we know what this ecosystem is capable of doing. But do you think, unless you are participating in mining HEX, staking HEX, that it's just not going to be worth it for you to do, or at the very least, you're wasting a huge opportunity by not punting it out at least a certain amount of time?
Yeah, I think there's a couple factors. There's the boil the frog factor, where the system moves so slowly. It's not exciting. I mean, other than a few of us weirdos, right? Now waking up in the morning going, Quattro Cinco's, let's stake some X. This is great, right? I mean, it's not like the thing, right? And so you got a little bit of that, so it's hard to see it. Then you have the, people are going to be like, I don't know, they don't want to commit. They don't have the value. They don't know that things are going to continue. But probably the number one thing is, and I get this all the time. People just point to the top and go, look, you could have sold at 40 cents. Staking's crazy. And, that's a really hard argument to kind of like beat back. Now, we all know that the reason that happened, besides the fact that money was coming in and we had the, sacrifices, so people wanted to hold on the HEX in order to sacrifice it, is because we had less sellers, than buyers. We had more buyers. And that is what drives the price up. If all of us had decided we're going to sell, that top wouldn't have lasted very long, right?
Yeah,
and that would have gone away. So I think it's a mixture of things. It's maturity in the market, all that stuff.
Very cool. Well, that was the only questions that I had lined up. I'm not sure what happened to Broke Boy there, but did you have anything else that you wanted to cover?
Yeah, he said he had to get out at 8. Yeah, man, this was fun because it's like an hour and a half, and I didn't even realize it. The time went by so fast. Yeah, let me just show you one. I'll just show a couple things. So this is our expected T-share rate increase, but on a daily basis, it's so tiny, right? It's very easy to kind of like fade this. But I do expect 15 years it'll be, almost 8.5 times, 8 times higher than it is today. But that's just how the contract works. The reason I cover this is just to remind myself and others continuously
So hang on. What's the green is, what's that say?
Oh yeah, I'm sorry. The green is PHEX.
Okay.
And the pink is EHEX.
I gotcha. Okay.
Yeah. I go over this every week. I'm sure some of the people are like tired of hearing about it, but what it just proves, Ewok, is contract does what it does, right?
Sure.
We look in the back and see, what happened. We see that it goes up and to the right. We can basically prove that the contract does everything that it says it does. That's it's supposed to do. And that means that it pays out more HEX over time to people who have T-shares, and so it just continues to go up and to the right in that way. If we look at just there's probably one more on this side that we could show real quick, and then kind of like wrap up. But just looking at Quattro Cincos, I've been on this campaign all year, just talking about what was happening, and back in March, you can see we hit a low of less than 1,000 T-shares were created in March at 0.92 that were Quattro Cinco. And because there was less than 1,000, this is really where I woke up. I had been doing some staking, but I was like, wait a minute, this can't be possible. It's really this low. And that kind of prompted me to start looking at the numbers more. And I've been on a little bit of campaign to let people know, hey, listen, you may not be interested. It's fine. I mean, there's no requirements that you have to go out 15 years. In fact, I wouldn't recommend that everybody go out 15 years for everything. I mean, certainly there are some people that do that. But we've been working on this all year. And so you can see that we're coming up in the numbers. We had our best month in T-shares Quattro Cinco last month in August. We will probably break around 30,000 T-shares for 2039. And that's all fine. That's great. I mean, I'm glad that that's happening. I think for the people who are interested in that, if things play out the way we expect them to play out, the way I expect them to play out, they're gonna have the lion's share of T-shares out there. And why do I say that? Because every day that goes by that these don't get filled in, fewer people wait until 15 years from now are going to be staking into 2039, which means this Poseidon is going to be the Poseidon in 2039. Heck, I don't know what's going to happen after this. But we can see in 36, we dropped 50%, more than 50% in T-shares to 372,000 in 37. And then we dropped almost 75% to about 80,000. And now we'll close out this year with about 30,000. We've been on a downtrend. If the trend continues, there'll be more opportunity for people who plan to be around back out there to be receiving the lion's share of the T-shares.
Very interesting. Plus, it's harder to get, right? As the T-share rate goes up, it's going to be harder for those people to fill in at that point any ladder that they, may have been waiting on doing or whatever it may be. It's just going to get harder and harder.
100%, because like even right now, so like so I woke back up and I was like, wait a minute, I need to listen, I'm going to be freaking 75 years old. I don't know that I want to be messing around with this, but I'm kind of addicted with the game.
Sure.
Right? I'm like, how do I get more HEX in the future? Right. So that's why a lot of times I'm like, I'm not even talking about price. I'm just like, how do you have more HEX? I want to have as much HEX as possible. The market will figure out prices and whatnot. But now I'm on this Quattro Cinco kick because I'm like, man, for 3 T-shares, I can be a dolphin. Heck yeah. And watch that and maintain it. And so now I've gotten to the point, particularly with the tie-in with COM and Hedron, right, as derivatives, I'm at the point that, well, wait, I get 50 more times the COM for a long stake than the shorter stake. Well, that's good. I get more proportionally by T-share for Quattro Cinco on Hedron. So I have these other things. So now I've come to, now mind you, I already have my short and my medium term covered, right?
Right.
So I'm not talking about I'm doing this and I can't pay my light bill, right? I'm saying that to the extent that I can risk funds in crypto and I want to do this, I can go all the way out there and be able to get it. And so now I'm really I moved to the next level, which was, well, wait a minute. And this kind of gets back to your point about the cost. Where am I going to get the HEX next year to get my 3 T-shares? And then I look at the price and I'm like, I don't want to pay for it. I like the price. I like the price I got now.
Got to earn it.
But I mean, with it 10x's, I don't want to bring new cash in if I don't have to do that, right? So, but there'll be other people that won't have HEX. And so I'll have HEX from my ladder. In fact, I'm, now of the mind that, maybe some short staking in order to create Quattro Cincos makes a lot of sense. 6-month stake, earn enough HEX, put it out Quattro Cinco, and just kind of like build my number that way. Because at the moment, $200. Yeah, I said to you, $200 dinner for 4.
Right.
Yep. $2,000 at a 10x. I don't know, guys. I don't know. A lot of people, they can't come up with $2,000 if their life depended on it. So $2,000 is a lot. $20,000, that'll be a lot, right? And so when we look at that curve and how it comes down on the screen when I was looking at that chart, that's even more reason why the future T-share years won't get filled in, right? Because we gotta have the capital to do it.
Sure.
And then the final thing is just to peruse this for one moment is this is our list. I get a couple different ways of the 2039 holders that are out there. We've got almost 2,000 individual wallets now. About 747 of those addresses are HSIs. So I kind of estimate maybe it's 700-800 people are actively staking into 2039 right now. Which is, I think, is pretty significant in my mind to have 1,000, maybe 1,000 people between the holders and all the rest that are dedicated. We've got a prosperous Poseidon out there. We got 13 whales, 131 sharks, and 550 dolphins at the moment. And so if they keep up with their ladder going forward, this is the new class, right? That'll come in 15 years. And we've got our requirements now and what they are, to be that dolphin, it's just 2.8 T-shares. To be a whale, it's only 284 T-shares. I say only, that's still what, 10, 12 grand.
Yeah.
Right. So,
but relative speaking to what it is today.
Yeah.
That's crazy.
Yeah. So lots of cool stuff going on.
Yeah.
And then, and then the real big one, I don't know if Johnny's still out there or not, but this is something that we've talked about in the past. Let's see, where do I want to go? So we look at this chart here about these, you see how these T-shares are ending here, right? We are coming up to the halfway point,
right?
For these stakes. And really, those two big bars for 29 and 30, really, they take place between October of 29 and March of 30. This time is coming up in about 2 months.
To be halfway.
Yeah, to be about halfway. And so that's where the fireworks could begin if people really do decide. Now, I'm not super thinking that that's going to happen, but I allow that again. I'm in my head, So if I go look at Big Payday, just show you what the Big Paydayers are doing. We can look and see what the stats are for that, for the Big Payday guys. So the Big Payday guys, they got a lot of HEX coming out, in 29 and 30, right? And so I'm just looking at this chart here, and you can see down here, HEX Big Payday. You see the 29 and the 30 in red here. These are the years, so it's that same other chart, just in red. That's when they'll be coming out. But what have they been doing so far? Just like Big Paydayers in general, we have had we had 226,000 Big Payday stakes, and we have had 32,000 of them end early. But they normally end, they have an average length of about 1,000 days. So we're kind of past that now. Because we're well over 1,000 days old, because we're approaching 5 years.
Right.
I don't know what these folks will do, but I do see that we've had penalties. I don't doubt that. But the question is, will
almost
these guys,
almost 6 billion in penalties.
Yeah, so when we look at this chart here, and that's probably the one I should have pulled up as the monthly, and I'll do that. But we look here at these 2 months. So the idea is, well, how much of these, How much of these 1.5 million T-shares are going to end early? And that's a lot of the discussion. How much of this 1.4 million will end early? There's a lot of discussion about it, and the the worry over it. But for people who are laddered out, man, what another opportunity! What a huge opportunity that'll be. So this is a very similar chart, just looking a little bit differently at it, where I'm looking at the HEX that's there. And so the idea is, I say that, we've been running around 15%-ish, maybe it's 15 or so percent that end early, but maybe 90%. We'll just say all of them end early. Well, if these folks all end early over the next 6 months or so, as we go into 25, well, the most they can get is likely going to be this HEX at stake, which is 5.6 billion. Right. The other 41 billion goes out in penalties.
Right, and half of that goes to the people that are yet ahead of that.
Yeah, exactly. And then the other half just increases the payout per T-share for everybody else too.
Sure.
Right. Because the other half will go to the OA, and because it goes to the OA, it's minted, and because it's minted, it now inflates.
Yep.
So there's all these kind of like checks and balances. So yeah, I mean, we'll watch this carefully and see what people do with that.
Well, I'm in your corner. I meticulously place a 5555 out every month.
That reminded me, I watched your stream last week. That reminded me to contact you guys. That's why I contacted you.
Yeah.
Because I was like, you're doing it. I mean, yeah, listen, they called me crazy, but hey.
And I do notice every month, because I try to get a certain amount of T-shares for that month. So that, because I started playing the game of what you were talking about as well. You only need this many to become a whale or a shark or whatever. And I'm like, well, it's a little late now, but for the next year, I can definitely focus on becoming a shark at that point, because like I said, I try to get a certain amount, and I notice each time I'm putting in more HEX to get, because the share rate does go up like that. So it's a neat little game, but again, I'm not ready to cash out. I do want to play the long-term game, and I want to have a ladder that I eventually just don't even have to worry about, or if I'm not here, my kids can take it over as long as they do it the right way, right? So
yeah, it's a hard concept to get through my head. That idea, and this is one of the reasons we preach so hard about units when it's cheaper. I mean, because I just like, what's the right way to say that? Yes, it's anecdotal. Almost everything that I'm like, wow, man, I should add more of that. I had a chance to get more of it at a much lower price.
Yeah.
But I didn't decide to get it. Like I didn't buy ETH when it was sub-$1, right? I think I got my first when it was like $30, right? And I certainly didn't load up the truck, right?
Right. Sure.
And my first Bitcoin, it took me, I had to watch it go from 200 to 2000. And I had already been watching it before that, before I actually got involved, right? And got more units. Now, and even with HEX, I was so burned on 2017 and 18. Sure. I was so pissed. Even when the HEX launched, I was like, yep, I'm going to put $10 a day in. Yeah, and clearly not whale material, right? But that was, I was like, I'm gonna put $1,000 into HEX, And anyways, but the point I'm making is I've now seen that, and you can see that has also played out for the assets that people really liked. How many people were like, I'm so convicted, I'm gonna buy $1,000 worth of ink at 40 cents? Not too many. Right. Somebody did. Somebody went up because the price went up. But most of us wait for that confirmation bias first. I got to be confirmed, right, that it's going to go up. Now that's usually after it's gone up 2 or 3 hours.
Sure.
All right, boss.
Yep. Thanks. These levels are juicy. So the moral of the story is, if you want to accumulate units, there isn't going to be a whole lot of time left. I'm thinking to do so. So. Yeah.
Well, I got to tell you, even now, people laugh about it, maybe, but I don't think so. They'd be on my side. even with the hex stakes I have now, I would not be willing to put the amount of money back in. I'd have to like think about it. I'd have to be willing to put that much money back in on a monthly basis.
Sure.
It's a lot of money.
Yep.
Right? I think $10,000 is a lot of money. I think $20,000 is a lot of money. So when I'm seeing what I'm getting out of the hex, I'm like, man, even the daily rewards, that's more than I'd be willing to put in. It's not just a cup of coffee.
Exactly.
You know?
Yep, for sure. Cool. All right, ChrispyMan. Well, I think we're going to wrap it up here, and we appreciate you coming on. You want to tell people where they can find you? And I know most of these guys are already following you, but for those who aren't, let them know what you're at.
Absolutely, my friends. Yeah, you can go to hexfire.io, and I do have public charts up there and information. Just follow the menu and go to the charts. You can see the adoption chart up there and whatnot, and a bunch of things. You have something you want added there, let me know. For people who are looking for more detailed information, you check out the membership stuff on there. But hexfire.io, and then here on the YouTube's hexfire.io. Very
cool. And yeah, we do this stream every Wednesday night, 6:30 Eastern time, and we will be back next week. So we'll see you then. Thanks again.
Yeah, thank you very much for the invite.
Yep.